Hello everyone, I hope you're doing fine and are in your best health and spirit. Today I'm going to talk about top-down analysis on NZDUSD, and I'll be covering some topics which includes structural bias, momentum, EMG pattern, and inducement. And yeah, one last thing was to determine if we are in correction phase, impulsive phase, or if we are moving from impulsive to correction and vice versa. So these are different phases of market, and I'll be talking a little bit about that. So yeah, without any ado, let's get into it. So yeah, on daily, if you can see that we were breaking structure to the downside. The overall major structure was structural low was this market printed low high, and it broke again downside. So the major break of structure was to the from here. Let me just do it that. Okay. Now I have to determine that which is the structural high and which is the structural low. So I can easily do that by because the move originated from here and it has came to an end till this level. So this goes my structural high and this goes to my structural low. So overall, this is the whole range which from where we would be taking our trades. Next thing is that I'll be marking my premium and discount zones from here to here. So the range below this is discount range, and it's ideal to look for buyers within this range, and as soon as price goes into this area, it's ideal to sell. So there is a clear order block, a daily order block, which we can see, which is in here, right? And as you can see that this order block lies within the premium range, so it's ideal to sell from here. One more thing, if you can see from here, price was coming down impulsively, the momentum was strong, but it started to lose its momentum. This was an impulsive move, and what we are anticipating now is a correction towards till this level or maybe above, who knows. So market is in four phases. It's either in impulsive, it's either in corrective, it's either in from impulsive to corrective, or it's either from corrective to impulsive. So we have the market had did some sort of impulsive to corrective, and it has showed some signs that tells that the market is now in a corrective phase. So what we are looking for is buys from this area, from this region toward this order block in here, right? And what signs did actually market show that showed that the market is now in a corrective wave instead of impulsive? And let me show you that. If you can check that market did some sort of rest in here, and after some rest, it again breaks structure to the downside. So our structural high was this point, and this point was soon broken by this candle, break structure to the top side, and this is called as the market shift. All right, so the market shift has occurred, and the structure shift has occurred, and now we can anticipate that the market may go towards up to this zone area, right? And if you can check that the last order block, which was here, market mitigated that and now has a potential to go upside. Now if you can check that this was the last high low, this was the last high, and if you can check that price again broke structure, indicating that we are just in here. So price has clearly broken the structural high, and this gives us another order block, which is just right here, right? So this is our recent order block, and we might be taking longs from this area, right? Now there is some sort of imbalance in here, and there is some sort of inducement as well. You can just see right here, inducement. these are other confluences which shows that the market has a chance, has a potential to go upside, mitigate this level, and then fall down. Because as you are in a discount range, it's already preferable to buys, and these other confluences give a more probability that the price will go upside. Now, moving down to the 4 hour, I just checked that there wasn't too much, but we'll try to refine our zones. So this is some sort of big range, and we'll try to refine it down into this area, including that wick. This is the whole range, but yeah, that's it. Um, one more thing which I wanted to show you on 1 hour was, let me just refine it down into this candle. Now, as you can see that this was a low, and liquidity lies within below this thing, and the most important thing that was that this range is so much visible. Whenever will come into this range, it's very easy to understand that very supply and demand traders will try to go buy from this level here. So it's really not an ideal thing to go long from here. Rather than it's better to wait for price to give more indication, and being more conservative. It's better to go from this zone. All right. So to me, this zone is more like a liquidity zone. All right. Yeah, and last thing about momentum, as you can see that the price was very much momentously coming down, and I anticipate that this is not a level from where price have to go up, even though if you can check that this is more like a mitigation log. Cent analysis, I wanted price to go up from here, but seeing the momentum, seeing the delivery of price, it's really not ideal to go along from here. Rather, what I'm anticipating right now is some sort of accumulation, and I will talk about that AMG pattern. So this is something which I'm anticipating right now, an accumulation phase, and what I'm anticipating next is uh, some sort of manipulation phase, and from here the price when taps into that, I'm anticipating a push up to the upside, which if you are a swing trader, then you can obviously target this zone here, but being an intraday trader, I'll be looking for 1 to 5 risk to ratio, maybe till here or maybe till here, and yeah, that's it. So yeah, of course, some few things: inducement, liquidity, AMD pattern, momentum, determining the structural bias. Yeah, that's it. So I hope this may help you guys. So thank you very much for your time.